In this presentation, we will take a look at the vendors section of the homepage, and in so doing, look at the vendor cycle or accounts payable cycle within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We're currently in the Get Great Guitar company file. You can find this home page no matter what company file you are in. So you want to go to the home page by going to Company and then Home Page. I'm also going to open the Open Windows every time here by going to the View dropdown and go to the Open Windows list. And that'll show us what is open on the side panel here. I've now closed everything to just have the home page being the only thing open in the open windows. We are now going to go through the navigation of the home page, including the vendor section. If you want to jump straight to data input and starting a new company file, you can go to the videos that start with a 6 to do that. We're first going to go through the navigation because that gives us an idea of what the flows should be, what the process should look like. And most of the time, if we're going to work for another company, the data is already in the system. What we want to know is, how is the data in the system? How do we sort the data? How do I get around this information? That's what we'll learn here. That's what the home page is really good at doing. So we have a pictorial representation of the normal flow, the normal processes, and the bills, which are really the driving factors that QuickBooks will use in order to record most of the transactions. When we learn financial accounting, we typically learn what a transaction consists of in terms of an accounting equation. There's going to be two accounts that are affected and whatnot, or in terms of debits and credits. Those things are still, of course, applicable here. Those are driving these transactions, but QuickBooks is going to try as best as possible to have all normal transactions, all normal data input put in such a way that people don't even need to know necessarily what accounts are affected and what debits and credits are. So in order to set up the system, we would need to know those things. In order to just enter data into the system, however, we, if it's set up well, can just use these forms. So first, let's take a look at the vendor section. If we are a merchandising company, we're going to have this upper tier up here of the vendor section. If we're a service company, we may not have this upper tier. We here are going to be Get Great Guitars, and we're going to sell guitars, and we're also going to have some service on the guitars, and we will have some other service including guitar lessons. So we sell guitars, sell inventory, as well as have service items, and therefore we have this merchandising kind of column up here, our row of data flowchart. If we're a service company or merchandising company, we will always have this bottom layer here. So no matter what type of company, if we do bookkeeping or any other type of service information, we will always have the bills and then pay bills information within the vendors section. Note what vendors are. Those are going to be people that we pay, people we owe money to, people we do business with, people we buy goods and services from. And vendors could include any typical kind of person that we have payments to, which are end of month bills like the phone company, utility company. And if we're a merchandising company, then we typically think of the vendors as the people we buy merchandise from. So if we buy guitars, the vendors are going to be people that we buy the guitar from, the producers of the guitars, or whoever we buy the guitars from, mark them up, and then sell them. So when people say vendors, they could mean one of those two things. They could mean just talking about the people that they buy their inventory from. That's their main vendors, because that's their lifeblood, to buy the inventory and then mark it up. But vendors in general for QuickBooks is going to be anybody that we pay money to, basically, for goods and services. You can see that a merchandising company, if we're going to track inventory, is going to be more complex than a service company by looking at the vendors section here. If we're a service company, we're only going to have to deal with these two items, and we're not going to have to deal with that tracking of inventory. So that's something to consider when doing bookkeeping or thinking about how you're going to set up your books if you have inventory or not. So the bills we'll start there because this is going to be on any type of transaction. These bills are what's going to drive the entering of data into the system, the creation of the financial statements, the balance sheet, the income statement, the profit and loss. The first item is going to be the bill. So if we enter the bill, if we select the bill item here, this is going to have a journal entry every time we have a bill. The bill means that it's going to increase accounts payable, a liability account. So it looks like a check, but really this is going to be something that we're going to enter data into the system, and it's going to increase a payable that we have not paid yet. We haven't written the check when we enter the bill. And then it's typically going to have two items down here, either an expense tab, well, it'll include an expense tab, and an items tab. And the expense is just going to be the other side. So notice that every transaction is going to have two things that are going on. One, the bill means that it's an accounts payable account, and the other side is going to be whatever other side there is. So if we paid the utility bill, the other side would be an expense, utilities expense, telephone bill, an expense, the telephone expense. If we paid for inventory, then we would use the items and choose an item, and it would increase the inventory item. So for example, if we use this little back arrow here, we can see a bill. This was to Edison. We're entering the bill. It looks like a check, but it's a bill. And we're going to enter it to Edison here, and it's going to, the other side's going to go to utilities. So what that's going to do is it's going to increase the accounts payable one side, and the other side's going to be utilities expense. That will always be the case. To see that from the other side, to what happens, what does QuickBooks do with this data, we can look at the reports, the financial statements. To do that, we'll go to the reports dropdown up top. We're going to go to the reports dropdown, and the reports we're always going to be looking at are going to be the company and financial reports. So we're going to go to the balance sheet standard. So we're going to go to the reports dropdown, company and financial, balance sheet standard. And then we're always going to change the dates up here. Now it only has one date here. I'm going to go up here to the customized date range because that'll allow us to do some zooming, and we'll talk more about that later. But customize reports. And then we're going to change the dates. I'm going to type this in there as easy as possible without having dashes, and just practice typing as little as possible. I'm going to type in 01/01/19. So that's January 1st, 2019. When I hit tab, you can see it says 01/01/2019. So January 1st, 2019, that's when we're going to enter the data as of for this particular problem. And then I'm just going to say the end date 12/31/19. That's December 31st, 2019, 12-31-2019. And then we're going to say OK. And here's the data that we have. So we only have data for January and February that we're going to enter into the system. This is kind of like the end result. So we're looking at the end result that we will make once we get to the videos that start with a 6 within them. And so the bill then is not going to be doing anything to cash. It's not cash. We're doing something to accounts payable. So whenever you look at anything in the system, you want to kind of go to the reports and say, what is it doing? Well, here's the bill, here's accounts payable. If we double click on accounts payable, we'll zoom into it. That's what that Z stands for, zoom. And then we're going to go in here, and here's the data of the transaction. And here's the transaction types. So you can see they're driven by bills. So the bill is something that's always going to be increasing the accounts payable. So I won't pick the same bill, but if we pick any bill here, here's Edison bill. If we double click on that bill, it'll then go to the bill. So here's what's generating that information. This is how QuickBooks is making the information for the vendors. Closing this back out with this little X up top. We're going to close this back out. Closing this back out, not the whole program, but just this X underneath it. We're going to keep this report open, and we still have the home page over here. Then we're going to open the profit and loss report. Same way. Go to the reports up top. We're going to scroll down to company and financial. We're going to go to profit and loss standard this time, P&L. This is what QuickBooks calls the income statement, a profit and loss. And we're going to use the same date range. I'm going to do it the same way. I'm going to say 01/01/19. That's January 1st, 2019. And it's going to go to 12/31/19, which is December 31st, 2019. And then click down here or refresh, and it'll give you the data. So the other side of this information that is going to go to whatever expense account we picked. In our case, it was utilities expense. So if we double click the utilities expense, we'll see that it's driven by a bill here. Here's a bill for the Edison bill. If we double click that, we can see the bill. So the bill is being used as a way to enter the data, the journal entry into the system. So I'm going to close this back out, go back to the home page. Now, we could, of course, enter a check. We could have just written a check. And if we wrote a check and paid it to Edison for the utility bill, then it wouldn't go into accounts payable. It would just decrease cash. And we can do that by just writing a check over here. So this would be the factor. If we're going to enter the bills within the system, it's going to go into accounts payable and then pay the bills. So then we would go over here and pay the bills. And it's just going to show the bills that we have to pay. This is a really useful system because it allows us to enter the bills, as many bills as we want within the system whenever we get the bills without paying them at that time, and then sort the bills by when they're due and try to pick out which ones we want to pay, and then check off which ones we want to pay and pay them at that time. This is the point in time that we actually write the check if we're using this kind of flow system. We're going to write the check at this point in time. This then is going to decrease accounts payable, and it's going to actually write the check. So, and we can do this all at one time. We can actually print the checks from this screen, or we can just enter the data into our system and let QuickBooks just track our data by using this format. So if we close this back out, I'm going to use this little X up top. Then that side of the journal entry, if we go to the balance sheet in the open windows, is going to be decreasing cash. So here's the checking account. If we go into the cash, double clicking cash, you'll see these items down here. These are going to be the types of transactions that we have. So if we scroll down, we'll see some that is a check, but it's also a pay bill check. So this is a check that particularly paid a bill. If we double click on it, it doesn't go to the same input screen. It goes to just a check screen. But we wrote this check through that input screen, and then it generated this check for it. So that's going to be the normal process. So I'm going to close this back out. I'm going to close this back out. And we'll go back to the home page in the open windows. That's going to be the normal process for the vendor section. We're going to enter the bills, pay the bills. Now there's nothing stopping us if we just want to write a check to just write the check for the bills at the end of the month. We can do that too. It's going to just basically skip a step within it. We will directly pay the vendors. They're still going to be vendors, but we're not going to go through the vendor cycle, the payable cycle, which is the accounts payable cycle. We could just write the check from here, or if we want to enter that data directly into the register, we can go to the banking, use register, and we can go to the checking account and write the check from the checking account. We'll show a lot of examples of this when we start to enter the data into the system. So I'm going to close this back out. Then we've got the up top is going to be if we are a merchandising company. If we're a merchandising company, we could have this thing called a purchase order, and that's usually for larger companies that have a purchase order. And the purchase order is going to be a request for us to get inventory from the company. It's funny because it's the only thing on the sheet for the most part that doesn't have a journal entry related to it. It's only a request. So if we're going to buy a guitar from a vendor, then we're going to fill out a purchase order. The purchase order is going to say, we would like this guitar. Would you ship it to us? And then we'll pay you. And so it's a little bit different than what we would think normally when we buy something from, say, Amazon or something like that, something online shopping or something, where we pay at the point of purchase even though we haven't received the inventory. So some companies, depending on the size of the company, can purchase their inventory with a purchase order, requesting the inventory, and then it's going to get shipped to them at the point in time that it is received. That's when we have the inventory. That's when we receive the bill and pay the bill. So we've got the purchase order. If we're in the type of company that we have to pay for the inventory at the point in time we purchase it, then we're not really going to use a purchase order because we're just going to enter basically the bill for the inventory items that we're going to be purchasing. And then we've got the receive inventory. So then we're going to get the inventory, receive inventory with a bill. And so once we get the inventory, we're going to have it and the bill related to it. And the bill is going to be similar to this bill down here. It's just going to be a bill for inventory items now. It will be tracking inventory items. So if we were to select this item and go back one, it's still going to be a bill here. Let's see if we could find one. We'll go back a few. But now it's going to be an inventory item. So it's still just a bill, but it's an inventory item. And if we created a purchase order for it, it'll populate automatically. So we'll talk more about what the items are and how to use those and how inventory is tracked later. We're just going through the flow right now. So if we close this back out, now this item is going to be there if we were to receive inventory without a bill. So if we received inventory without a bill, then we would enter the inventory related to the inventory that we had received. Then what we're going to do is, of course, pay the bill. And this will be the same process. We'll pay the bill. However, this time we will be paying the bill for our main vendors that we buy inventory from. Process being the same. It's going to decrease the accounts payable, and we're going to pay the bill out of the checking account. We also have the manage sales tax up here. This could be thought of as closer to the customers section because sales tax is something that will be generated as we create invoices, as we create sales receipts, if we're subject to sales or usage tax, meaning if we're selling something that is going to be taxed at the point in time that we sell it and therefore have to collect taxes from the people we sell to, then we're going to have to collect that tax and then pay it out. That's going to depend on where we are at. In the United States, it'll depend from state to state. It'll depend from region to region. We'll talk about how to enter that, how to track that. And then, of course, we'll have to pay the sales tax. And the reason the sales tax manager is up here in the vendor section is because the person we're going to pay, which is the government of some kind, is going to be a vendor. We're going to have to set them up as a vendor because there's someone that we're paying to, which is the definition or what a vendor is for QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info.